The FT has been taking a look at the investment strategy of Qatar Holdings, a sovereign wealth fund that has been extremely aggressive with its global acquisitions since 2009. With me to discuss our story is the Financial Times editor, Lionel Barber. Lionel, thanks for being with us. Let's start by just talking about why. Why is the FT devoting 2 pages to Qatar Holdings?
It's a lot of space, but this is a really important sovereign wealth fund. You've got to remember that since 2008, just after the financial crisis broke, that this is a fund that's been receiving $30 to $40 billion a year to invest. They're claiming returns of around 20%, just under 20%. That's pretty spectacular. Of course, the S&P, if you look at that, the returns somebody investing in the S&P since then, they would have got 15%. But by unanimous judgment, this is a very remarkable fund. And they've done some big investments, like in Barclays, in the Xstrata-Glencore deal, biggest mining merger ever, and they've done very well.
But you don't think that they also just got lucky? They had a lot of money, they came in at the bottom, and they were able to ride the cycle. I mean, there was so much to invest in.
At the end of 2008, after Lehman Brothers, people thought the financial system was going to melt down. So clearly, those that had cash, and the Qataris had lots of cash, cash was king, they were in a uniquely strong position to impose strong bargaining terms, and they did it very well. But on the other hand, you have to give them some credit for some very bold investments, like in Barclays, when of course the banking system was very uncertain. And
the world is changing now. You know, we're in a different cycle. Market conditions are improving. Of course, at the same time, other competitors are coming into the market. How does that affect Qatar Holdings?
Well, there's no doubt that in a credit-squeezed world, cash was king, as I say, and the Qataris were in a very strong position. Now, credit is still tight. And we're still seeing, as just the central bank governor's statements this week on forward guidance about low interest rates for some time to come. But clearly things are getting better. We're not in the depths of the crisis. So the Qataris are rethinking their strategy, and other players, if you think of sovereign wealth funds in Asia, they're beginning to compete much more strongly with Qataris.
Of course, at the same time, there is now momentous change in Qatar itself. The Emir recently abdicated in favor of his son, and most importantly for Qatar Holdings, you've had the main personality that has driven this, the whole investment strategy, Hamad bin Jassim, is now gone. He's no longer prime minister or head of the Qatar Investment Authority, the parent. What will that have in terms of an impact?
Well, this is a matter of great interest to foreign investors, because with Qatar Holdings' incredible clout on the world scene, they want to know that there's going to be continuity. And of course, the departure of the man known as HBJ, the Qatari Prime Minister, he's a billionaire in his own right. He's been that CEO. His departure does leave a gap. The fact is that the long-standing senior executive at Qatar Holdings, Ahmed, 37 years old, he's remaining with the fund. And I think that's an important statement of continuity. The other important point to make, of course, is that there's been a separation between the family, the dynasty, and the fund itself. They've not mixed investment strategies.
What next do you think for Qatar Holdings in terms of an investment strategy? Of course, so far there hasn't been much of an investment strategy.
I think what has been special about Qatar is that, unlike other sovereign wealth funds in some areas, where there's been a blurring, say, of family interests or dynastic interests with the investment fund's strategy, they've kept that separate. So I think that continues. But what you're going to see, we hear from our reporting, and Roula, you've obviously been involved in this, is an insistence they've got to professionalize. You can't be everything being done at warp speed, lack of transparency in some areas. They know they haven't got such a strong negotiating hand. So I think a continual, if you like, professionalization, maybe some outsiders coming in, but still continuity.
Thanks very much, Lionel.